Hello guys, hope you're doing great. Happy New Year everyone. This is KFA and I hope you all had a great New Year. So over here I'll be analyzing XAU USD. As you can see, I'm on my 4-hour time frame. And right now the market is dormant because today is the New Year. As you can see, I don't know if you can see my time. If you can see my time, this is just 11:03, which is just past 11. So let's get into this. I will start it from 1 month time frame. Now let's look at this. This is gold. This is how gold started. So you can see how it moved up, and this is a new higher high. That means gold reached a never before level. The level it has never reached before. Never before reached level. So from this we can see the general direction of the market, which is an uptrend from the 1 month time frame. We can see that it is an uptrend. So let's move on to our weekly time frame. Okay, what do we see here? I can spot a lot of levels. Okay, I'll just pay attention to this zone. I'm coming. I'll just pay attention to this zone. Just this one. I'll pay attention to just this zone. Why? Because most of you are day traders, and this is actually a long time. I mean, a very long time. So that means anything market is going to do is going to be within this zone. So keep that in mind. Let's move on. This now takes me to spotting my key levels. I like doing this. This helps me know the reaction of the market. It helps me know where market is going next. Because once I can spot those key levels, you may be asking, what are key levels? Well, that is something I'm going to answer. This is one key level right here. Key levels are just positions on the chart where markets react to. For example, when you say, why did I put a line here? You can see market reacted to this place. Why? The price got to this place and bounced back. If I'm to come right back to this side, you can see it right here. Without even seeing, that's to tell you that the level I drew there was a valid one. This place I just seen here, if I go to a smaller time frame, it's actually a wide range that market reacted to. So you don't leave any plate unturned. So I think I should add one more. I will add one more, which is this. Market react to this. We can see it here, we can see it here, we can see it here. So okay, from here I know where the market is going. It's still an uptrend. As you can see, it is still an uptrend. So that is the trend of gold is an uptrend. Let's go to the daily time frame. We can see the daily time frame as you can see those zones, how market reacted to them. They draw it very well. Make it clear. Can you see this? Same thing for the rest, to make them clear and crisp, so it is easier to spot. Okay, so wow, on a daily time frame we can see this pin candle. Anywhere I see pin candle, I'm always watching out for the opposite direction. For example, this pin candle is pointing upwards, so I'm watching price going downwards. I don't place any trade here, mind you. I don't place any trade here. Why? The reason is because I'm not a swing trader. A daily time frame is too big for me to trade on. Things can happen. So 4-hour time frame, we're now moving to the lower time frame now. A time frame where we can see many opportunities. So what do I do? So pay attention, guys. I'm going to be explaining some key details in this chart. I'm going to be drawing some lines. I'm going to tell you the uses later. Okay, so take a look at this. Before 2024, markets stopped here. That is, the market was planning on dropping. Now, I won't say dropping per se actually, because it hasn't been confirmed that the market is dropping. You can see there's also a key level here. Because this one is a very big key level, because you'll be asking why. This is the recent reaction that market had. So now look at what I drew these two lines. Why? I usually bank my trade on possibilities. If this candlestick breaks through this line, that is, as you can see, previous reactions to this level. If I go back, that will be too long. But if I go back, I'm going to see that there are reactions on these levels, even in the previous charts. So it acted as a resistance here. The market broke through it. Acted as resistance all through this place. Resistance all through this place. Then broke out. Immediately it broke out. It broke out of this one. It gets to this same level, this same pin level, and started falling back down. And there are two possibilities. It may be market. It's not that it may be. It is because market wants to retest. Now, one of my mentors will say something like, market is not just a car that just drive in a certain direction and go, you just buy and place it. No. Once market goes up, it comes down, retest zones, move up, comes down and retest zones. As it is retesting those zones, if it has any opportunity to break through, then the direction of the market reverses. So it has broken through this place, acted as resistance here. Now it came down and it broke through this one. Since it broke through this place, we can now say, okay, let's watch what the market is doing. If this candlestick or the second candlestick breaks through this line right here, then I will go for a sell, because I have confirmed that this level has been broken. I will go for a sell and place this is what it's going to look like. I'll place my stop loss. I might take profit right here. My stop loss right here above this level. Why am I doing that? Because of my risk to reward ratio. You understand? So, but if market it gets to this place and bounces back, then I go for a buy. it is like this. Now this is a bit tricky. My first take profits will be here. My second take profits will be here, because market has gotten to this place before. Now, its market may have the intention of coming here. It might have the intention of coming here, but it can't just go directly here, because this high is an high it has never. Okay, let me use an example for you. Let's see a scenario. Look at when market got to this higher high. It immediately reversed, and it reversed a lot before it picked up its pace again and came back to that level. Can you see? That is to tell you that it had the intention of getting to this level back here, but it had to retest zones. Same thing happened. Now it happened there before it broke through. That is to tell you that is to confirm what I've been saying, that markets retest zones. Now, sell me personally, I'll back on a sell, because I don't think it's necessarily time for market to come back and retest this level. I think it should be time for it to be retracing back its steps. So watch out for gold this new year. Watch out for gold. Watch out for gold. There is going to be massive opportunities. Just place these levels in your mind. You understand? Thank you. I will see you in the next one.
Make sure to hit that subscribe button. If you know you don't want to blow that account, hit the subscribe button, guys. Price action is everything, but when you follow us on KFA and you watch every of our analysis every week, I can tell you, I can beat my chest for you. You're gonna be profitable in the forex market. So this is it, spot on KFA analysis. Check out our next videos that we're going to be posting by next week. I'll be giving you more updates. Bye bye.